Good morning. We are off and running. Apple's gapped down a tiny bit, my go-to stock. Let's see what that does. Facebook is gapped up again this morning. Sandisk has gapped down this morning. That's looking interesting. Okay, Facebook is interesting, but it's in an overbought scenario on the daily chart. The daily chart's overbought. So when a stock is overbought on the daily, the odds are higher that the velocity is on the short side. I'm going to actually try Sandisk on the short side here. Let's see. I'm now short 2,200 shares of Sandisk. I am offering for more shares short above the market. I always do that. So that means that if Sandisk moves back up to the upside, I'll actually get more short than my current 2,200 shares here. So I'm already up $212. That's pretty quick for a few seconds here. 344. All right, looks 608. I like it. I like it. I like it. 762.95. One of the things I try to warn my traders from doing is I try to warn them or prevent them, I should say, from what I call P&L trading. I don't like them P&L trading. I want them trading off the chart. The chart is real. It is actually what is happening. I mean, aside from your occasional erroneous tick and things of that nature, it's true. It's what's happening. I also try to warn them against too much scenario building. Now, there's a difference between having a plan for each eventuality that a stock can go through. That's different. If the stock does this, I will do this. If the stock does B, I will do this. If the stock does C, I will do that. Okay, that's very different from scenario building. The scenario building is really the scenario without a plan, and it's the trader's form of worry. There is no need to actually know what is going to happen next. There is a need to know what you'll do if this happens and that happens, but there's no need to absolutely know for sure. A lot of novices spend a great deal of their lives as traders studying and things of that nature with the hope of gaining some magical ability to be able to read the future. You can't. Just like a professional poker player does not know which cards are going to be drawn next. He cannot predict that in most cases. However, he can be a great odds player. And what is an odds player? It is knowing when you have an edge. Take Sanders, for example. The the daily is overbought, which means it has room to come down on the downside. There is a gap down. So a gap down ignites this or pushes this overbought stock over the edge. I am under a declining 200 period moving average, which will act as a ceiling for the stock. It's a beautiful scenario. I have an edge. The daily gives me the edge. The gap down gives me the edge. The fact that it's under the 200 period moving average gives me the edge. The fact that it's also under the 20 period moving average gives me the edge. So all of these things, I'm going to lighten up a little bit here. Let's see. All right. Down to 200 shares, 2,000 shares, I'm sorry. Now I'm bidding at 54s. We're at 62. So I have orders at 54 for a few hundred shares already waiting at 54s. Now, if you followed my work for any particular time, you know that I'm a trader who bids very often for his buys and offers very often for his sells. That doesn't mean that I don't hit the bid sometimes when I want to sell and hit the offer when I want to buy, but it is not the majority of the cases. I am largely a bidder when I want to buy, and I'm in offer when I want to sell. That's 80+% of the time, which means that I I am an adder of liquidity versus a remover of liquidity the vast majority of the time. When you hit the bid or hit the offer, you're removing the bid, you're removing supply, or you're removing merchandise off the bid. And when you hit the offer, you're removing merchandise off the offer. You are a remover of liquidity. But when you place a bid, you are placing your merchandise on the bid. You are adding your merchandise. You are adding liquidity to the market. When you place your sell on the offer, you are adding your merchandise on the offer. You're adding your shares, adding liquidity to the market. And markets pay professional traders, not novice traders, not retail traders. They pay professional traders to add liquidity. You see, there's a great deal of competition amongst all the various exchanges. The market as a whole is very fragmented, if you will, and there is a great deal of competition amongst these fragmented exchanges. No, send your orders our way. No, send your orders here. We will pay you if you send your orders here. We will pay you if you add liquidity to our market, because a market's value, an exchange's value, lies in its liquidity. A trader wants to know that he can get filled very easily on your exchange. That means the liquidity is the value. All right, now I'm bidding at 54s, I told you, right? I'm bidding at 54s. Okay, let's see if we can get down there. Now, if SanDisk rallies back to the upside, I will look to actually build up my position from this rather small 2,000 share position, and in anticipation of a move, another secondary leg to a brand new low later in the morning. And we'll see how this pans out. Again, remember, I am bidding at 54. The spread on SanDisk is rather wide here. It's 55 by 61. Let me see here. Okay, I'm down to 1,700 shares here. Another thing a lot of novice traders don't understand, I'm down to 1,400 shares, is that there is a queue to be had. There's a queue to get in line on your various exchanges. A lot of people say, oh my goodness, I didn't get filled on the price that I was at, and I saw it trade there. But yes, where were you in the queue? Were you late in the queue? Okay, I'm down to 1,000 shares, so I've eliminated 50%. Okay, I'm down to 500 shares. Okay, let's go flat. There we go. Yes, not a bad, well, how many minutes? Not a bad 10 minutes or so. We've grabbed our $1,500 in the first 10, 11 minutes of trading or so. Not bad, not bad, not bad. Now, again, this trading that I do for the videos is for demonstration purposes. As many of you know, I do spend a good portion of the rest of the hour trading, but this video series is called or entitled Trade the Open Like a Boss, or another way of saying it is Trade the Open Like a Pro. So what I'm set out to demonstrate is how almost on an everyday basis a very skilled market player can enter the market shortly after the open, shortly after getting an assessment of where the edge is, and actually make a living in the first 10, 15, 20 minutes, and sometimes, depending on the open, as much as 30 minutes in the trading day. In fact, most skilled traders that I train are done with their entire day between an hour and 90 minutes in the first part of the day. The extraordinarily skilled ones are done in the first 10 minutes to first 30 minutes of trading, right? These traders oftentimes don't press it. They have found their niche as a professional market player. They have found the time of day that gives them the best edge, that matches their personality. And for me, as a former market maker, I have always done extraordinarily well and the best in the first few minutes of the trading day. I am an above average assessor of where the edge is, where the path of least resistance is. And let's not forget, if you look in the upper left-hand side, as I've mentioned in a variety of other videos, I deal with a very small universe of stocks. This is my world. What you see here is my own personal Oliver Velez stock exchange. I am intimate with these plays. The typical novice or retail trader is all over the place. They're watching CNBC, they're watching this symbol and that symbol, and they'll play this stock and that stock. They'll read something in a magazine or the Wall Street Journal and play here and play there, where the very true professionals are not moving all over the place. They are intimate with their world. They know the idiosyncrasies, the characteristics of each one of the stocks in their world. A New York Stock Exchange specialist is the ultimate professional. He's at the very top of the food chain. He trades one stock. The NASDAQ market maker is second on that list. He will take your lunch every single day if he can. Sharks, they trade what, 2-3 stocks? 2-3 stocks are in their world. If a hedge fund hires a professional trader, do you think the hedge fund that might have 100 different positions in the entire portfolio, do you think they give that trader the opportunity and right to trade all 100 stocks in the hedge fund's portfolio? Absolutely not. They're hired to perhaps, maybe for now, here are 4-5 stocks of our portfolio that you're responsible for maintaining and trading around, lightening up when it's appropriate to lighten up, adding when it's appropriate to add. So when you go into the professional world, you understand that they have an edge over the retail trader because their world is so small. And here's the retail trader coming along. They probably never heard the symbol before. They heard Jim Cramer mention it on CNBC or something, and now they're walking into a world of sharks, and the sharks own that world. They're there every day. It's their home. And in this home is a large table with food on it. Here's the retail trader entering into this home with these sharks sitting around this table, thinking as though they can, with their little $25,000 trading account at TD Ameritrade, walk into their world, into their house, sit down at their table and take their food. It's just not going to happen. I'm sorry. So the professional has a very small but intimate world. The novice has a very broad, wide, non-intimate world. They're familiar with nothing except their inability to do anything consistently. But that's not going to be you if you continue watching here. This is Oliver Velez coming to you live once again on this, what's the date? Sorry, Tuesday, March 24. There we go. Tuesday, March 24. Until next time, I'm signing out. Ciao for now.